We'll be covering our office sector. Joe's out of Charlotte. He's a senior vice president of our advisory and transaction investor leasing group, aka office landlord representation in Charlotte. He's got 12 years of experience in commercial real estate. He's been involved in some of Charlotte's largest lease transactions in recent years, and he's a graduate of UNC Charlotte. Secondly, we have Dotson Shank. Dotson is based out of the Triad. He's our managing director of industrial services for Raleigh and Triad. He joined CB in 2004. He actually started our office there in 04 and led that office through 2016, and then became smart and wise and decided to just focus on brokerage, and that's what he's been doing ever since, and very successfully. Dotson has transacted over 10 million square feet of industrial product and office, a value over $18 million, and he's a UNC grad. Then we have Tiffany Barrier. Tiffany is based out of Raleigh. She's our senior vice president of retail services with 13 years of retail experience. At one point, she was based in Seattle and worked on the investment team with CB there. She's has her CCIM designation and went to University of Washington in Seattle. So welcome them. I'm just going to hit a couple things, and then we'll get to the meat of the presentation with the folks who really know what they're talking about. So again, this is just it's really a view of the state of North Carolina, which is good for us to kind of combine our thoughts from local market expertise and put it on a statewide scale. So this has been a fun exercise for us. So these are our folks that'll be talking to you today. And if you have questions or anything, please send it through chat, and we'll try to get to them. There will be a Q&A when we're done, but glad to have a little bit of interaction in between. So North Carolina, just a few highlights looking at the numbers. We were named the #1 top competitive state for business by Site Selection for 2020 or in 2020. #1 lowest tax rate for corporate headquarters by the Tax Foundation in 2020, and the #1 state for business by Forbes in 2019. And you may want to note that we've been, North Carolina's been named the top 6 for 12 consecutive years. So a good long run that we hope continues. An interesting stat, we have 90,000 miles of roadway in North Carolina, which is the 2nd largest state-owned highway system in the United States, which I did not know, but that certainly helps us as we're trying to move things around, particularly with e-commerce in the virtual world of COVID right now. We have 53 colleges and universities, including 17 public universities. We all talk about talent, and we typically talk about the top few colleges and universities, but you know, it takes all 53 to get us to where we are. And then we have 4 international airports, plus 11 regional and 100 general aviation facilities. This is just showing you population growth. Note that since 2020, North Carolina has recorded exceptional population growth compared to other national cities in the United States. You can see from this chart, we called out Triad with their 20.3% growth, Charlotte with 53.7%, Raleigh with 63.2%, and we hear too much about Austin, but at 80.5%. One of the themes you'll hear during this presentation is why we're so blessed to be doing business in North Carolina, and how we're very optimistic about post-COVID, whatever that looks like and whenever it happens. But the 5-year population growth for Raleigh is just under 10%, Charlotte 8.7%, Triad 3.8%, for the state 5.8%, and if you look at the stat at the bottom, for the United States is 3.7%. So that's a good tidbit of knowledge to start thinking of the future and the fact that we're pretty blessed to be here. Snapshots of the markets. I'm not going to read all of this, but you can see the population in the 3 respective markets that were represented today. The total office for all 3. Office vacancy, which I think is a key indicator which to mention. In Charlotte, it's currently 12.3%. In Raleigh, it's 10.9%, and in Triad, it's 11.2%. And then you can see Industrial vacancy, 5.1 in Charlotte, 6.8 in Raleigh, 5.4% in Triad. So relatively healthy numbers in industrial anyway. And then you see the total footprints of retail in all three markets. And then we just threw out some of the key industries. In Charlotte, it's financial services. In Raleigh, Durham, it's technology, life sciences, and in Triad, logistics and transportation. Unemployment through the pandemic, this starts from your left, or at least my left, June of 19 and takes you through November of 20. So it'll be interesting to see what the latest statistics come out as. But this is the latest information that's available. So you can see the spike that we all endured in March, April, May, and then started to come down in June. So it'll be interesting to see what happens as this pandemic continues. And there's just a couple of reference points. The Great Recession, it was 11.4%. During COVID, the peak was 12.9. And then if you look on these right numbers here, as of November, Charlotte was at 5.9, Raleigh was at 5.3, Triad 6.9, the state at 6.2, and the United States at 6.9. 6.9. So again, outperforming and outpacing the country as a whole on average. So it's a good thing. I'm going to turn this over to Joe. Joe's going to speak on office. And then we'll flip it to Dotson to talk about industrial, then Tiffany about retail, and then we'll wrap it up and have some Q&A. Joe?
Sure. Tom, thanks so much for having me. Appreciate you putting this on. It should be a great event. We can turn to the first slide. As it relates to office in the state of North Carolina, things have really been great the last few years. Starting on the left side of the shot, as it relates to rent growth in our markets, Charlotte in particular has done extremely well over the last few years as it relates to rent increases. Raleigh, Durham also has done fantastic. If you put this into comparison with the overall US market, we're growing at a much more rapid rate than most places in the US. So that's really exciting. Office is booming right now, and developers are building. That's the fact of the matter for the state of North Carolina. If you think about Charlotte and Raleigh in particular, there's over 6 million square feet of new office construction set to deliver over the next few years. And then Raleigh is almost 4 million square feet. If you think of that from a total inventory of the United States in general, that pace is only about 1% of the total inventory. So we're clearly over and above from a build perspective. Now, oftentimes in this types of situation, someone will say, well, are you going to be overbuilt? And I would argue that in all of the state of North Carolina, the answer to that is no. Our markets are still very healthy because there's continued demand and absorption in the entire state of North Carolina, and quite frankly, throughout the Sun Belt. Charlotte in particular, we have, of the 6 million square feet that we have under construction, over 50% of that is already pre-leased or spoken for by tenants either coming in from out of market or currently in the market. So we feel pretty good about that. Next slide, please, Tom. Even in 2020, North Carolina had some really strong positive absorption numbers, and certainly at least through the first 3 quarters. If you look at in Atlanta, Raleigh, Charlotte, Sun Belt cities that have done really well, absorbing space, not having negative absorption. And if you target some of the cities that are at the bottom of this, where there has been the most negative absorption, you'll notice a trend. They're very expensive markets. There's a lot of mass transit that they rely on pretty heavily. Our markets in North Carolina have a lot of really great things going for us as it relates to absorption. Next slide. Certainly, COVID has presented challenges in the office world, but as it relates to sublease space, that's a question that we get pretty often. Is how are we faring related to tenants giving back space? And the reality is we're doing really quite well. Subleases have certainly had some impact on direct leasing, but it's not as dramatic. We're seeing ask rates and strike rates really hold firm, but other concessions have certainly gone up. Free rent, TI, things of that nature. But as a general rule, we have not seen any markets in North Carolina retracting in terms of the face rates. And then as you think about it from a percentage of the overall market, we are still below the 3.4 average that nationwide of space that has been turned into sublet. So in Charlotte in particular, we're just a little over 3, and Raleigh-Durham is doing fantastic at 2.4, and then the triad is less than 1%. So that's really encouraging. And then as we think about companies are coming here, right? They're relocating, they're expanding, and they're really doing it in diverse industries. Charlotte, for example, has always been very bank heavy, but in recent years, especially since 2015 on, we've really diversified, and we have a lot of software technology groups. Centene, listed here, is Charlotte's largest announcement in history when we received Centene, the healthcare insurer, which is really their software and technology division, an expansion from St. Louis. And then in Raleigh-Durham, life sciences has been huge, of course, and again, more software and technology. So there's been a lot of expansion since 2018, creating over 25,000 jobs in the state of North Carolina. We can talk a little bit about the capital markets side of things. So investors are taking notice of our market, and groups that have not traditionally been in North Carolina are coming here, and they want to invest. I'm talking to more new groups just about every day because they really do want to be here. If you look at the middle of the screen, historical trade volume, sales volume year over year has been up dramatically. And even in 2020, which really starting in March, a lot of things really halted then, the volume of sales maintained pretty well. And I can at least speak for Charlotte as it relates to 2021, that the numbers are very strong going into this year. So that's very exciting. A couple of key takeaways. The rail yard project in Charlotte, which CBRE sold, that sold at a record price at $611 a square foot. This is in our really cool sort of millennial submarket, a lot of technology, a lot of really great new retail and multifamily. This is in the heart of it all, and Cousins Properties out of Atlanta was the winning bidder on that because they feel very bullish on the city of Charlotte going forward. Some other really interesting things that we're seeing from a investment sale perspective these days are the emergence of foreign capital, and the Perimeter Park deal, for example. This was a buyer from Singapore that it was their first purchase in the Carolinas. So our capital markets folks are telling us every day on the office side that they're being flooded with inquiries with foreign capital that want to be in the United States, and in particular, want to be in the Southeast. So as we think of the large office ownership groups and institutions in our country, we have in the state of North Carolina 8 of the 10 with a current largest groups with a current presence in the state of North Carolina. And I can tell you, I've been talking to the Brookfield and Tishman folks as well. So of the two that are not currently investing in our markets, they want to be in and they want to be here. So that says a lot about the state of North Carolina, which traditionally it was a lot of tier 1 cities that these major institutional players wanted to be in, but now they have gravitated to the Carolinas and to North Carolina in particular. We can just end with a little bit of the why. If you think about the great weather, I don't ever say that our state is cheap. I feel like that sort of cheapens the product. We're a cost efficient, comparatively speaking, to other places, but we have a very highly educated workforce. It is a lower cost of living compared to some of these tier 1 cities that are really getting hurt right now with what it costs to live, work, and play in places like New York, et cetera. So we have a lot of really great things going for us on the office side, and as well as population growth. So you take all of these different icons that you see here that I think we would all agree on. You add the fact that there's such wonderful schools, and Tom alluded to this earlier. And what do you have? You get a lot of millennial migration that's going to keep fueling the business sector, whether that's office, industrial, retail, for the foreseeable future. So the future is bright for the state of North Carolina, especially on the office side. Thanks, Tom.
Thank you, Joe. Well done. We'll slide over. I have some questions, but we'll get through the presentations, then we come back to a few questions, assuming there's time still available to us. So, Dotson?
Hey, can you hear me all right?
Perfectly.
All right. So I'm going to touch on industrial, which is really pretty easy to talk about. It's a lot of people want to talk about industrial these days, which is fun. For years, it was sort of the forgotten sector, or sector people didn't want to spend a lot of time on, but suddenly everybody's really interested in industrial. So that's a good place. They're having their time in the sun, if you will, right now. I'm going to hit on really 4 trends, and then I'll have some slides to sort of dig in a little bit deeper into those 4 trends, but 4 kind of primary things that are driving our industrial real estate today. So Tom, you can go to that first slide you were just on. The first one is really low-hanging fruit, and that's e-commerce. I think everyone on this call, I'm guessing, in recent days or hours has probably ordered something online, and more you demand that product be delivered to your door maybe as soon as this afternoon, or certainly the next day. So everybody wants it immediately, and that's really driven a major ramp up in industrial activity. The Amazon effect is real. You can see, I'm not going to read it, but you can see the square footages Amazon occupies in each of the 3 major markets today. And, really they started their build up around 2014 or 15 with probably maybe 100,000 square feet, if that, in each of these markets. So the ramp up's been pretty dramatic. And just to speak to, a little bit of the e-commerce, in 2020, Amazon was the largest transactor, if you will, if that's a word, of space. Nationally, they leased about 78 million square feet of space. The second largest tenant was Walmart at 8.2. So think of that spread, and then you've got Lowe's and Home Depot kind of rounding it out in the top 10 as well. And Amazon really has forced these other retailers to keep up. That's driving a lot of activity. Home Depot, Lowe's, Walmart, Target. Walmart just took down about 1 million square feet in Statesville. But the pandemic has increased e-commerce's share of retail sales, which has directly led to warehouse absorption. So It's real. We're seeing it every day, and those e-commerce, drivers are really moving the market. But the second thing, second big topic is just the bulking up of the traditional warehouse inventory. Again, I think everybody here went to the store during the pandemic and saw empty shelves, whether it was cleaning supplies or toilet paper or chicken or beef or whatever. And so a lot of retailers, a lot of stores, grocers really were caught shorthanded, and the manufacturers behind those, the Procter and Gamble's, just to throw one out there, for example, were kind of caught a little bit. I heard a new term for this ramping up of inventory, and we're going to see it more and more. It's called safety stock. Companies were running lean inventory for a long time, and we're just going to see more goods kept, if you will, in warehouses for the foreseeable future, until we probably get a little casual again and run it back lean. The other thing under the bulking up is just the growth of our state, and Tom and Joe have touched on it. Go back, Tom, real quick, if you don't mind. Just the increased warehouse needs to service the population base that's growing. And then the biggest, we'll see in a second, but rents are appreciating, and the biggest sector, if you will, within industrial that's benefiting from that are the shallow bay kind of infill product. The demand for this infill space, whether it's 100,000 square feet or 30,000 square feet, but the warehouses that are the closest to the population base is particularly strong. Go to the next slide. Next couple slides are just, I'm going to kind of somewhat reinforce some of what I just touched on. This is just showing the total inventory of industrial, and by industrial we mean warehouse and manufacturing. If you add those numbers up, if my math is correct, in 2014 combined we were at about 261 million square feet as a state. 2020 we ended the year at about 342 million square feet, which is about a 30% increase. And you could go back 2013, 14 is when we really started coming out of the financial crisis, the Great Recession, if you will, and developers got a little more active building space. So next slide, Tom. Again, this just shows the construction. I thought this was pretty interesting. Speaking of Amazon, really showing the huge leap in 2018 and 19 for buildings that were under construction, and this is across the whole state. User demand, as you can see, as well as the developers got very comfortable building speculative projects. So major projects in all three markets really have led to a huge build up, which is great for our GC friends that are on the call. And then, I think this chart, if you kind of absorb it for a second, the small line is the vacancy rate average across the state. And then the bar graph is, of course, the asking rates. And this is, it's great when a chart comes together and actually says what you hope it will. And, this really demonstrates that the demand side has kept up with the supply side, right? So we had a tremendous amount of construction that we just touched on, and a growing inventory base, but the vacancy rates have shrunk, and the asking rates, not surprisingly, have gone up as construction costs have gotten more expensive, as the markets have gotten tighter and landlords and owners have been able to push those rents. And then, another kind of dynamic that I think is worth touching on, in all three markets, we've had a tremendous amount of investment sales activity, and I'm going to touch on that in just a second. But those new owners come in with a stepped up basis in their buildings and a strategy to push rents, in large part because they need to get the returns, and they have to. but because it's been active, that strategy has worked out, and we've seen a good amount of rent growth. So I think this speaks a lot to the health of the market. Not unique to North Carolina. Nationally, rents are up about 8% year over year, 2020 over 2019. So that's really a nationwide trend. Kind of third topic that's driving things, which is near and dear to my heart, living in the Triad, sort of the manufacturing base of the state, is a resurgence of manufacturing. And I can't overstate this enough. North Carolina, we've been the beneficiary of a number of recent announcements across consumer goods, furniture, food and beverage, you name it. In the Triad, Nestle Purina announced about a $450 million investment last year. Ontex, which makes a Belgian maker of diapers, about $100 million announcement last year. Prepacks, a furniture company. Charlotte, a rival electric bus maker. Evans Food had a major expansion. There are a number of them. So, and I can tell you just firsthand, the project activity is extremely strong right now. The companies we're seeing are not abandoning their international manufacturing. If they're manufacturing in China or overseas, we're just seeing a demand to have a presence in the U.S. and a little bit closer to the population base, so that those supply chains are not disrupted as we saw. And then the last one, Tom, if you'll go to the next slide, which just is absolutely phenomenal, is the life science impact. And this is my colleague Ann Stewart's slide, which I've seen and she uses. It's excellent. And if this is a statewide deal, but what's going on in the life science industry in and around Raleigh-Durham is phenomenal. This is just since 2018, over 4,200 jobs announced, $3.5 billion invested, and there's a lot more on the horizon. So this is that cluster, if you will, has always been there, but just it's growing pretty dramatically. Next slide. And then the last that I'll touch on kind of topic is just the industrial real estate capital market side of things. The investment sales, industrials become a very sought after investment class. All three major markets are seeing it. I think the state as a whole, and I've got a pretty good graphic in just a second to demonstrate this, is being viewed, particularly from an institutional standpoint, as a safe place and really one large area. So strong demand, cap rate compression, record-setting pricing largely, and I think that we've seen a migration into industrial from some of the other sectors that maybe not have been quite as active. And then just a couple of stats on the next slide. This shows the volume. Left side is the U.S., and they had a little bit of a downturn or pullback, if you will, in 2020. Some deals were pulled from the market, call it March through June. But you can see North Carolina on the right, obviously just rolled right through. Safe market. We did see some pretty big portfolio sales, particularly in the Triad and in Charlotte in 2020. That impacted the numbers. But really across the board, we see 2021 as being another record-setting year. Next slide. I thought just if you can sort of peruse this, I'm not controlling the cursor, but if you look at
I can do it.
All right.
I got it.
Tom. Raleigh, Durham, and Charlotte.
Over here?
Tiffany knows about that
That's right.
part of the country. She can talk about it. But Raleigh, Durham, these are Class A cap rates, by the way. Class B is about 100 basis points higher than this, but you know, as low as most of our surrounding cities that we kind of run into every day. Northeast has still got some very low cap rates, and of course the port cities there and the port cities out on the West Coast. But you know, who would have thought a 4 3/4 cap rate would be kind of the norm for a good Class A building? And frankly, the Triad is right in there, maybe 25 basis points higher than what we see in Charlotte and Raleigh, but it's extremely active as well. And why is that? I love this map. This is just showing, I think it's just a really good visual to show how well connected the state is from a transportation standpoint. You really, you know, you go from Charlotte through the Triad into Raleigh, all interconnected by interstates, situated, you know, right Atlanta to our south, the mid-Atlantic states to our north. So it's just a, you know, a really large, the population crescent, the 85 population crescent is what we've heard it referred to. So I think that's given the institutional community a safe, you know, safe story to tell as they really look at the South and just the, you know, the strong demographics that were touched on, you know, great place to live and good labor availability and all those sort of qualitative reasons that we've touched on. And then the last slide, I thought just shows the major owners and developers. And I think the takeaway here is the consistency. The institutional owners have really gravitated to the state and are comfortable with it. And really are, you know, we've got local developers that are active, but a lot of the ownership side of things is coming from the Links, Exeter, GC Prologis, really occupying, owning and occupying in all three markets. So happy to answer any questions later, but I'll turn it over to you, Tom.
All right, thank you. We'll go through retail and then have a quick conversation, a couple highlights, and open it up, folks. Tiff?
Yeah, that sounds good. Really appreciate everyone's time today. Clearly, retail touches each of us in our daily lives in more ways than sometimes we stop to think about. So last March, we all had a little shock to our system, had some reorganization of our habits and our way of going about our daily life and how to handle getting goods and services that we were so readily used to getting. So Sam, you can go to the next slide. You know, during that time, or Tom, you can, during that time, there was a lot of conversation about retail being on, you know, the brink of a huge collapse, and we're going to see thousands of bankruptcies. And this is a national slide just speaking to the resiliency of our brick and mortar. Brick and mortar certainly isn't dead. That's been a misnomer for a number of years now. We've seen a lot of expansion across brick and mortar, both nationally and in North Carolina. I think it's just changed, and a theme throughout all of the different points that I look at, and it's something that you've likely heard on multiple conference calls, is just an acceleration of some trends that we were already starting to see glimpses of before the pandemic started. So, you know, there's some really important takeaways that we've seen, things that have crystallized throughout the last year, and things that I think will continue to fall away. So, you know, we maintain a lot of really positive sales growth through brick and mortar. That is not to shame any e-commerce. If you want to go to the next slide, that's a pretty significant high point. Our holiday sales, we're still up. This is nationally, again, 8.7% year over year, but a 47% increase in e-commerce sales. No surprise there. All of us are home or, you know, bouncing around as much as we can between the office and you know, struggling to get our face-to-face interaction in any sort of retail experience. So that convenience factor has become, increasingly important for folks, and just the ability in a lot of states where they weren't even able to go out and they have even more serious quarantines or lockdowns in place over the holidays. This was critical. So, but it's a positive trend. I think that if you would have asked somebody in April, they would have thought that the holiday season would be potentially a disaster. So it's really nice to see that we ended the year in a strong fashion. A few other just points to call out. There's been a huge fitness frenzy in purchases over 2020. As you can see on here, the sale of health and fitness equipment doubled. I don't think that's a surprise to anybody either. I think this is one that's questionable how sticky it will be. I think that everybody at some point, as they feel it to be socially responsible or safe, is going to return to some sort of, in-person or group fitness in some capacity. It takes, you've always heard it takes 21 days to make a habit. Well, we've certainly been doing this more than 21 days. So I think that there are going to be some habits that people are going to stick with, whether it's through Peloton or just in-home classes or whatever they're doing, running. We've seen a big increase in sales from various sporting goods stores, not just in pure fitness equipment, but in shoes and athleisure, obviously, was a huge factor for people. Another one that I think is really interesting and sometimes flies under the radar is the movie industry. Not because we all miss going to the movies. We want our movie theaters to come back and that experience and the entertainment, but because there's such a huge domino effect within the entertainment industry that predicting when we're going to see this return, I think, is really precarious. There's everything from the initial filming through casting, everything has been delayed. So the ability to bring new movies to the theaters is significantly delayed as well. And that's really where the theaters make their bang, is with blockbuster releases. So it will be interesting to see how that shifts. But I don't think that will stick as well. I really believe that, as the movie theater can come back again in what they believe to be a socially responsible way and put people back in movie theaters and film movies, they will, and we'll all want to be out and about. I distinctly remember a conversation in April. Hope we're getting feedback here. In April, that everybody talking about that outdoor theaters were going to be the new thing again, and drive-in theaters. And we've certainly seen some of that, but I don't know that we'll see that long term. Finding the real estate to park that many people in a cost-effective manner isn't really something we'll see long term. And then I think something that's important to call out, because I know we all lived and breathed this through the last year, is just what our leases look like going forward. And probably more so in retail than in any other property sector. What are landlords willing to maintain in their leases as ongoing pandemic clauses? These were all the what if sections that everybody kind of glossed over, had their attorney look at, said, hey, make sure I'm like super protected in case there's an earthquake and the building falls down. But nobody really thought of this as something that could happen, and potential governmental closures. So we heard a lot of hey, everybody's in this together and working as a team together. Obviously, both landlords and tenants have their individual financial obligations that are important. So I think there's going to be a lot more scrutiny on various lease sections that were somewhat glossed over in the past. With it. And on this one, and just looking at trends, very similar to what Dotson and Joe said, we haven't seen a significant rent concession at this point in our North Carolina market. We've seen it a little bit in a couple other markets, and I truly believe that part of that is because we had growth potential in our market, in our rents. In North Carolina compared to other similar markets nationally. If you look at a Dallas or an Austin or an Atlanta, we were on the lower end, and bringing in some really powerful new developments and some really, cutting edge developments to all of our different markets. We're starting to nudge those rents, but we really hadn't gotten over our skis yet. So we're seeing a little loosening in some concessions from landlords here or there, and just some understanding and the importance of completing a deal and not having as much vacancy. But we haven't seen a huge rent compression yet, much to tenants' chagrin at this point. You want to go to the next one? Something I think is really important, and again, oftentimes gets overlooked, is really dividing retail into its subsets. People like to sort of blanket statement retail in general, but it really differs from property type. Obviously, malls have been under a lot of scrutiny for a number of years now. In North Carolina, we still have some highly successful indoor malls on a per square foot sales basis. The landlords of those have made a huge focus on experiential retail, adding outdoor areas. And then we have some that are due for redevelopment, much like the Epic Games takedown of Cary Town Center here recently. So I think we're going to see some of that continue with some of our, lower profile malls that still have incredible thoroughfare access. They make great distribution sites. They make great office sites. So I think we're still going to see some transition in there. But just looking across all of our different, subsets, the street and urban environment has obviously struggled the most with the lack of some office and employee base in our downtown cores. It's been challenging. We still have a lot of folks in those cores that are not reopened, lots of restaurants and retail. So I believe that's going to lag our return of office. And I think that's an important factor to consider when you're evaluating a downtown market or you're talking to a client in a downtown market, is just how that recovery is going to look, and potentially what that's going to look like. We've seen in North Carolina and nationally both community power centers and grocery anchored centers be really bolstered. I mean, they have easy parking. A lot of the retailers in them really had the omni-channel and their e-commerce at least somewhat dialed in so that they could pivot very easily as the pandemic hit, which was really important. Grocery is certainly still the winner in that, for obvious reasons. People still needed food. They were transitioning a lot from restaurants in the first place, but our grocery anchored neighborhood centers have remained incredibly stable. And we've seen in North Carolina, one more thing, just some really significant product launches as far as major developments. And I would be remiss if I tried to name them all, because I would certainly forget somebody. But a lot of these very high profile mixed use and just retail projects have received funding during COVID. They've broken ground during COVID. So it's really important to note how unique that is to North Carolina, and that's not happening in every market. We really are in a great position from our pipeline standpoint for significant retail and mixed use projects being delivered over the coming years to help capture the demand we're seeing coming from other markets. And in that note, the current activity, I think a big driver of that in the grocery sector, we've seen Wegmans accelerate their opening around the Triangle. They have accelerated their Wake Forest store opening as well as their Chapel Hill store opening. Trader Joe's has signed a lease in the middle of the pandemic. We've seen Aldi and Lidl both be active, and Harris Teeter is getting close to signing a lease, and it'll be their first one in quite a number of years in our market. So there's been a lot of activity. I think people always love to hear about what other sectors in retail we're seeing active. We're seeing a lot of emphasis in personal services coming back, and health-focused personal services. So not just like your nails and hair, but those have maintained, pretty strong throughout. We've also seen, discount retailers hold pretty strong, though they don't quite have the omni-channel figured out. So the e-commerce side for folks like a TJ Maxx or HomeGoods, you really still need that in-person shopping. And they've worked very hard to try to dial that in their stores. We've seen a big push from medical, vision, and then in your QSR and fast casuals for the restaurant sector versus your full service sit down. So we're getting a lot of looks in North Carolina from really cool, edgy, state-of-the-art brands that are national, that maybe only have locations in what are considered your major markets. that are looking at the North Carolina market for a lot of the reasons that you've heard other presenters mention with our disposable income and our education basis and the tech and the job growth here. I mentioned the suburban and urban demand drivers. I think it's something that none of us have all the way figured out yet, and what our urban retail environment is going to look like going forward. It's obviously an important part of every community and the fabric of the community. And so we certainly hope for, speedy recovery there. You'll see at the bottom, there's, we've seen a major discrepancy, and I'm using Raleigh-Durham as an example. Charlotte is relatively similar. They have a little bit lower vacancy than this. And the triad is a little more evenly spread, but our urban vacancy is 15%. I mean, that's much higher than we've seen in our market historically. Some of that's due to new deliveries that occurred, in 2020, but suburban vacancy being at 6.5%, that's a number that some communities and some cities nationally never see, being below 7%. A lot of them would consider below equilibrium. And I think it does make it challenging in our market to find really high quality space that's available now. So I think we have a lot of room for supply to come in and kind of elevate our whole retail experience in North Carolina. But we did only see a tiny drop year over year from 19 to 20. So I think we're in a relatively good position because we're just going to see additional activity into 2021 there. I think experience, I mentioned this, like a consumer experience, this is just such a critical factor. I think as you're talking to clients, if you work in retail at all, really having them hone in their customer experience. How are they getting food to customers? How are they going to continue to service the customer that doesn't feel comfortable dining? Because I think we have a long road until we're back to what people like to say is normal, which is probably never truly going to be the same. And I think we just have an evolution of what that normal is going to be, and need to figure out what that's going to be sustainable. So consumer experience is critical. This also trickles into soft goods. Nordstrom is a great example. For years, they've had free returns. You don't have to go to the store. You can ship it back. A lot of soft goods had really made effort to bring people into the store. So basically offering free returns if you dropped it off in the store, or you pay to return it to send it back. And I think that the marriage of Dotson's industry and the industrial, this bulking up of the warehouse, and how retailers are going to handle not only their ordering volume, which is huge at this point, but also what happens with this return volume is going to be really interesting. It's, again, an acceleration of something that we were already seeing with people trying to decipher this and figure it out. But that's going to be a big factor, I think, continuing through this and into 2021. And then I think we will see people continue to try to kind of entice folks into the store. They need that foot traffic in there. You get impulse buys. There's a factor that will aid in that consumer experience and bringing people in. It's just so hard to translate that energy of being in a store to being on a screen. And then I guess lastly, just keep an eye on your clients' decisions in their future deliveries and what they have planned. Outdoor spaces remain hugely important in retail and short-term parking and things of that nature. But we're in a really good position in North Carolina for retail. We're going to see a lot of exciting deliveries and brands announced and developments here in the coming years.
Thanks, Tiff. I feel like we had to go to commercials, so sorry to flip forward on you, but we're wrapping up. We're butting up on 1 o'clock. So I just want to wrap this and see if there's Q&A. So just some takeaways, and I'll just say a couple things. I mean, we're all very optimistic. I think the statistical data, the population growth all show that. One thing that I've kind of beaten a drum on is when articles were written back in the middle of the pandemic, or the middle of the beginning of the pandemic, in May, April, saying office was dead and retail's dead and all these things. I didn't believe it then, and I absolutely don't believe it now. If you just look at your own company and the culture and the things that you're missing out on not being together, collaboration, And you're reading more articles now about, okay, we do need to get back in some form or fashion to the office, and I think that will happen. I think it's beginning to, and of course we gotta be mindful of the pandemic and social distancing and all that. But very bullish on where we're headed going forward. We just got to get through the continued headwinds as quick as we can. So our takeaways in office: North Carolina expected to experience net office growth and inbound relocations in the future. There's a place for office for culture, productivity, collaboration, as they're suffering to a certain degree by the remote workplace scenario. Industrial fundamentals are strong through 21 and then some. Strong demand with e-commerce and manufacturing uptick. Investor development demand will continue to be active. Institutional capital active, and they see North Carolina and the 85 Crescent as one of a large region from a distribution standpoint. On retail, expected to remain stable. Suburban and grocery anchor properties are going to be key drivers. So what makes it, what gives us the thought of a bright future for our state? Low income taxes, fintech, technology, life sciences, agriculture, population growth, the quality of life that we all get to enjoy. And I hope we all continue to maintain our quality of life as we grow as a state. Cost of living, or the low cost of living, talent, and business culture. Again, we're really blessed to be here. We're blessed to be able to work with the folks that we work beside and against. And the culture is great as it's ever been. And again, I implore everybody to keep that in mind as we grow as a state. So the future of North Carolina commercial real estate industry is bright, and we're all really, really fortunate to call North Carolina home. Michael? Mike Ferguson?
Yep, I'm right here.
All right.
Hey, so we've got time for probably 2 more questions. You can either post them directly to me in the chat, or if we're orderly enough with 130 people, you can unmute yourself and ask, and then we'll go out to breakout.
Mike, if we don't, one of the things that we thought about is, you know, in very short, maybe rapid fire, you know, what do you see as any sustainable and ongoing trends post pandemic, whether it be in office, industrial, or in retail? Just again, maybe rapid order. Joe?
Sure. Some trends that we have seen, especially in 2020, was there certainly has been higher interest in single-story product and a tenant taking their own building. So where a group may have been in a 200,000 foot multi-tenant building and they're 50,000 feet, by way of example, we're seeing some of those groups looking to have their own facility. Some of that is the ability to control who comes in and out. If it's a single story product, even if it's multi-tenant across the product, as if it was garden office, at least having the ability to go into your own space, control the environment, have your own restrooms, no common areas, elevators, etc. We certainly have seen an uptick in that. Now, with that said, we handle a lot of product that is high rise. And I am certainly not saying that I think that sector is dead and that it'll never come back. But in 2020, when there was a real shock to the system, we did notice less interest in that product and more in single story. And as I had hoped, 2021 has proved in our CBD and Midtown South End product, where there's more high rise, that tenants are coming back and are interested in leasing space in high rise product.
Thank you. Again, I know we're short on time, Mike. Tiffany, just a couple of quick thoughts.
Yeah, outdoor space. I just think interactive outdoor space is going to be huge, and you know, curbside. So from a landlord's perspective, thinking through that ahead of time and offering that as just part of it, not waiting for it to be asked for in a deal. And from the tenant side is convenience. So just ensuring that you still are offering a convenient experience for those customers that maybe aren't going to come back as quickly is going to be important.
Thank you. Dotson?
Yeah, from a functionality standpoint, continued demand for trailer storage. I think we'll continue to see a push to, certainly 32, but 36 clear, and maybe a little bit beyond that, up to 40 clear. We're seeing the first building in the Triad at 40 clear right now. Larger deals, particularly on the distribution side, and a continued interest and activity on the manufacturing sector. And then, I think we'll see some emergence or continued growth from Wilmington, seeing more development activity and interest in that market. And then some of the infill pockets such as Mebane, I think we'll see areas like Salisbury continue to see some activity, but really that are clustered right along the interstate corridor.
Thank you. Mike, NAIOP, thank y'all for letting us do this. It's great to have this opportunity. Obviously, I would much prefer it to be in person like a lot of folks. I miss a ton of folks and I've heard from a lot through this chat here today, but thanks for doing this, and we're excited to be here. I hope everybody's doing as well as you can through the pandemic, and I feel really good about, continuing to do business in North Carolina.
Yeah, I agree. Thank you, Tom. Thank you for you and your team. Tiffany, Joe, Dotson, thank you for being a part of this. Thank you for sharing a little bit of your expertise with the group. This entire event was recorded. It will be sent out to the attendees who signed up, and it will also be posted on both our website and the Triad's website. So knowing that, if you have any questions, we're kind of done with Q&A. We're going to break out into some networking groups, some smaller groups, because as I learned this morning, and I think we all know that we need connection, right? We need connection. We can't wait to be meeting with people in person. So thank you all for attending. Thanks for making time. CBRE, thank you for your expertise. We appreciate all of your support of both of our chapters every single year. So thank you very much.